Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, at the time of recording this video, the Bitcoin price is trading slightly above this level of resistance, which I'll talk more about in just a moment, giving my next price targets. And on top of that, I'll be talking about something very interesting that's happening right now in the long positions and short positions that we need to pay attention to. So I'll be covering all of that and so much more later in this video. Definitely stick around. First of all, just giving you a quick update on what the US stock market did today. This right here is the Nasdaq 100 index on the daily time frame, and today the Nasdaq 100 index opened below yesterday's daily candle close, but throughout the trading day, the Nasdaq 100 index played out some bullish price action to pretty much meet yesterday's daily candle close. So in terms of the day-to-day price action at the daily candle closes, we've almost gone sideways in the stock market. But when talking about what's happened throughout the trading day, today has been a bullish day for the Nasdaq 100 index. And technically speaking, we still have this level of resistance that we're currently running into, and that is coming to play at around 12.1k to 12.2k on the Nasdaq 100 index. And if you want to know more of my thoughts about what could happen next for the Nasdaq 100 index, check out my last video that I posted on the channel. But what we have coming up really soon, in fact, it's happening next Wednesday, is the release of June's CPI data, which will update the official inflation rate of the US dollar. And right now, there is expectations on what that inflation might come in at. And first of all, in case you don't already know, the official inflation rate of the US dollar based on the CPI is sitting at 8.6% at the time of recording this video. And early expectations based on consensus and the trading economics forecast are predicting a potential 8.8% inflation rate coming in next Wednesday. Now, remember, if those are the expectations and the majority are expecting those numbers are pretty much already priced into the market, which means if we do end up getting an 8.8% inflation rate next Wednesday, even though, yes, that is higher than last month's, because of the fact that the majority is already expecting that number ahead of time, it's unlikely we'll see a lot of volatility if we simply meet those expectations with an 8.8% inflation rate next Wednesday. But when the June CPI data gets released next Wednesday, if the inflation rate at that time deviates from our expectations, that is when we could start seeing more volatility. And basically, if inflation next Wednesday comes in under what we were expecting, so if the number is less than 8.8%, then that is a good sign, and we could actually play out some bullish price action in that scenario. But on the flip side, if inflation comes in higher than what we expect, like what happened last time, we were expecting an 8.3% inflation rate, and inflation actually came in at 8.6%. So even just a 0.3% difference can be a big deal, and that difference in the inflation rate that we got last time actually led the Fed to increase their interest rate hike from a previously planned 50 basis point hike to instead a 75 basis point hike, which is obviously what we saw last time as a result of those higher than expected inflation numbers. So when those inflation numbers come out next Wednesday, if they come in higher than 8.8%, that is not good for markets, and we could end up seeing another dump. And obviously, the further we are from expectations, the more volatile the next move will be. So for example, if we just get an 8.9% inflation rate instead of 8.8%, we could still end up seeing a small dump or a small pullback of some sort, because yes, that would be higher than expected, which is not good news. But if we get something a lot higher than expected, something well into the 9% range, let's just say 9.2% or something, then we could see a much bigger dump in the markets. But between now and then, it's just a waiting game to see what those numbers are. And now getting into the Bitcoin part of this video, this right here is the weekly Bitcoin chart. And right now, the weekly Bitcoin RSI is finally moving back out of oversold territories. And this is very interesting because the last two times that it happened, that had meant we already hit the bottom for the Bitcoin bear market based on that 2014 Bitcoin bear market and the 2018 Bitcoin bear market. And if you're looking at these three moving averages, first of all, the green line is the 1000-day simple moving average, the red line is the 200-week simple moving average, and the blue line is the 300-week simple moving average. And then if you take a look at some of the most significant Bitcoin bottoms, talking about the bottoms of bear markets and that March 2020 crash, pretty much all of these major Bitcoin bottoms occurred around that 200-week moving average, talking about that red line line once again. But in some more rare instances, we do actually see price action below the 200-week towards the 300-week moving average, which is that blue line once again. And that's exactly what we saw back in March 2020. And so far, as of recording this video, we've pretty much seen that over the past few weeks. So historically speaking, based on these previous massive Bitcoin bear cycles and also other massive crashes like the March 2020 crash, technically speaking, the Bitcoin price right now is still very cheap, historically speaking, when you're talking about Bitcoin's longer term trends. And of course, relative to these moving averages and relative to the weekly Bitcoin RSI, which historically speaking has been very accurate. But of course, that does not mean we're immediately going to see all-time highs or anything like that anytime soon, because if you look at those previous cycle bottoms, we actually spent quite a few months worth of a lot of choppy sideways price action. And even after that 2014 Bitcoin bear market, after we actually bottomed out for that bear market, we had another dump in the Bitcoin price later in 2015 that pretty much revisited the bear market lows. So just keep that in mind. Just because we could be around that bottom territory according to Bitcoin's entire history, it doesn't mean we can't potentially revisit those lows or anything like that. And also keep in mind that we usually don't hit the next Bitcoin all-time high until after the next Bitcoin halving. For example, we had a halving back during 2016, and then later on we hit a new Bitcoin all-time high, and then we had another halving in 2020, and then later on we hit a new Bitcoin all-time high. And the next Bitcoin halving is set to take place in early 2024, so in less than 2 years from now, which means according to the 4-year cycle theory based on the Bitcoin halvings, which so far has not been broken, new all-time highs for Bitcoin are technically unlikely until the next halving takes place in early 2024. So we might not see new all-time highs until at least 2024, simply based on the 4-year halving cycle theory, which has still proven to be true after all this time. But keep in mind, even though the 4-year halving cycle theory suggests that we might not see new all-time highs until at least 2024, that doesn't mean that we can't see bullish price action between now and the next halving in 2024. For example, between the Bitcoin bear market bottom in 2014 and 2015, we saw a lot of bullish price action between that bear market bottom and the Bitcoin halving in 2016. Once again, a lot of bullish price action within that time period. But Bitcoin just didn't break that previous all-time high until after the halving took place, just like the most recent cycle. Between the Bitcoin bear market bottom of 2018 and the Bitcoin halving in May 2020, we obviously played out a lot of bullish price action, especially in the first half of 2019. But once again, we never actually made a new all-time high above that old 20K all-time high until after that Bitcoin halving. And generally speaking, according to Bitcoin's history, it's during those time periods, basically between the Bitcoin bear market and the Bitcoin halving, in that sort of time period just there and this time period just here, those have already proven to be the best times to dollar cost average into Bitcoin, historically speaking. So that's why personally I am dollar cost averaging quite heavily into Bitcoin at the moment and holding that Bitcoin in cold storage for the much longer term. But of course, that's not financial advice for you, because obviously I don't know your personal financial situation. So instead, I'm just letting you know what I'm doing with my own money and letting you know what I see on the chart based on all of this history. And hopefully you can get some value out of that. But anyway, zooming into the daily Bitcoin chart, taking a look at the Bollinger Bands indicator. Right now, these Bollinger Bands still have not expanded quite rapidly. We're basically still sitting in this squeeze formation, very similar to what we saw around a month ago, and also like what we saw towards the end of April, early May. And usually a massive squeeze in the Bollinger Bands indicator like this means that we're just about to see an extremely volatile move sometime soon, usually within 1 to 2 weeks from when we see that squeeze start forming. And just pointing out another similarity between what we're seeing right now and what we saw towards the end of May, early June, because during that time period a little over a month ago, we did actually play out a decent short-term Bitcoin pump, but it was only in the short term. Obviously, we were still in a larger downtrend. And at that stage, we had recently entered into this Bollinger Bands squeeze, and we had also seen quite a recovery in the daily Bitcoin RSI up towards these neutral levels right in the middle of the RSI. And that's pretty much exactly what we're seeing right now. So just keep that in mind. And if history repeats where the RSI has now hit that middle line, that neutral level, and because we haven't confirmed another expansion in the Bollinger Bands, which hasn't confirmed another volatile move to the upside, for example, there is still currently risk of a possible turnaround in the Bitcoin price, like what we saw around a month ago. All that is needed in this case is some bad CPI data to potentially repeat something similar to what we saw back here. But what could make this time different is if we actually get some good CPI data. If inflation either meets expectations or comes in underneath what we expected, then in that case, this time would be fundamentally different to what we saw around a month ago. And in that scenario, we could end up playing out that volatile move to the upside, like what I spoke about earlier in this video and more in yesterday's video. But once again, right now, simply just a waiting game to actually confirm what that inflation number is. And now zooming into this 12-hour Bitcoin chart, and right now at the time of recording this video, you can clearly see the Bitcoin price is trading around 22,000 approximately, which is pretty much at that line of resistance that I've been talking about for a while now on the channel. But as of right now, the Bitcoin price hasn't yet confirmed a daily candle close above this line of resistance, which is ideally what we at least need to see in order to potentially confirm a further breakout to the upside. But for more confirmation, I'll be looking for something like this, basically a retest of this previous resistance to flip it into new support. If we see something like that, where we actually find support along at 22,000 after breaking it, that would be very bullish market structure. But right now, as of recording this video, we're currently lacking that extra confirmation, and we still haven't yet seen that daily candle close above that resistance once again. So as I said earlier, it's simply just a waiting game at the moment in the somewhat shorter term in order to wait for more confirmation. But in the meantime, while we have a lack in confirmation, we have to understand there is a risk of us potentially getting a rejection from this line of resistance, considering we haven't yet broken above it with confirmation. And something like that could potentially result in a scenario like what we saw towards the end of June, basically a pullback down towards this line of support, which is sitting at around 19,500. And if you want to know the technical price target for the breakout of this pattern, if we do confirm a breakout, check out my last video on the channel because I spoke more about that yesterday. And now zooming in a little bit further into the 4-hour Bitcoin chart, and there's not much else to say here other than the fact that we have moved underneath those overbought territories in the 4-hour Bitcoin RSI since yesterday. And while that's happened, we've seen a bit more of a drop-off in the histogram within the MACD indicator on the 4-hour Bitcoin chart, which does suggest that we're technically seeing a slowing in the short-term bullish momentum, but this short-term bullish trend on the 4-hour chart hasn't been broken as of right now. Technically, this is still a bullish trend on the 4-hour Bitcoin chart once again. But if we see other signals such as lower highs and lower lows form in the 4-hour Bitcoin RSI, basically a short-term downtrend start forming, or if we see a bearish cross in the 4-hour Bitcoin MACD like what we saw back here towards the end of June, then that could be a bearish signal for more bearish price action in the short term. And right now, once again, we have a lack in that extra confirmation that we need to actually confirm a bearish trend in the short term. So those are pretty much all of the signals on the chart for Bitcoin that I am watching out for in order to see some more confirmation, because right now in the short term, once again, we have a lack in confirmation. We need to wait to see more confirmation in order to confirm the next direction for the Bitcoin price in the short term. So that means that right now, personally, I would not be in a high leverage trade at the moment because markets at the moment can be pretty unpredictable. But once we remove some uncertainties, such as the reduced confirmation in these technical indicators or the uncertainty of what that inflation number could be next Wednesday, once we start removing those uncertainties and getting more confirmation, then we can be more confident on where the price could be heading next. But with that being said, if you're taking a look at the Bitcoin long positions on the Bitfinex exchange on the weekly time frame, these Bitcoin whales seem to be very confident that the Bitcoin price is going to go up sometime soon. Because right now, in fact, for the past couple of weeks, these Bitcoin long positions on the Bitfinex exchange are pretty much at all-time high levels, which means there's never been more Bitcoin sitting in these positions, which are essentially betting on the Bitcoin price going up. There's never been more Bitcoin in these positions than what is in there right now and what has been in there over the past couple weeks. And you might be wondering, how do we know that these are Bitcoin whales? And well, first of all, the amount of Bitcoin in these positions is over 107,000 Bitcoin, which is worth currently well over $2 billion US. And during all of the recent Bitcoin crashes in recent months, we have only seen these Bitcoin long positions go up, not get liquidated. So when we're talking about billions of dollars entering into Bitcoin long positions that are not getting liquidated, even if the Bitcoin price dumps like 30-40%, there's a very good chance that the majority of the money in these positions on this exchange is held by Bitcoin whales. And we can also back that up by looking at another metric which shows the amount of accounts longing Bitcoin. And this is the metric that I was talking about. This indicator actually tells us the amount of accounts on Bybit longing Bitcoin. So essentially, this metric tells us how many people are longing Bitcoin, whereas the other chart told us how much money is sitting in long positions. So once again, the other chart which showed us how much money, or technically how much Bitcoin is in those positions, that was at all-time high levels, meaning a lot of money, billions of dollars, is betting on the Bitcoin price going up. Meanwhile, the amount of people over on Bybit longing Bitcoin, so the amount of people betting on the Bitcoin price going up, are actually pretty much at all-time low levels in terms of the Bybit exchange. So this is definitely something very interesting to pay attention to, and I'll talk more about what this means later in this video when I talk about it for Ethereum. But first, taking a look at the daily Ethereum to US dollar chart, and we can see these Bollinger Bands are still in that squeeze formation as I just talked about on the Bitcoin chart. And once again, we still have a lot of similarities between right now and what we saw roughly around a month ago. So this chart and these indicators for Ethereum basically tell the same story as what I talked about earlier in this video for Bitcoin. And now zooming in a little bit further into the 12-hour Ethereum chart, and at the time of recording this video, the price of Ethereum has played out a small rejection from this horizontal line of resistance, which is sitting at around 1270 to 1280. And once again, I've been talking about that line of resistance over and over, even before this rejection a couple weeks ago. So this is definitely an important price level for Ethereum to break above in order to actually confirm more bullish price action. And once again, we need to see some confirmation, such as at least a daily candle close, but ideally if we can see a few daily candle closes or something like a retest, that will just give us more confirmation in the breakout to the upside, which will give us more confidence in that move to the upside. But obviously, as I'm recording this video, we haven't yet seen a confirmed breakout above this line of resistance, at least just yet. So technically speaking, while Ethereum is still remaining below this resistance level, there is still currently risk of a possible further rejection, perhaps down towards this line of support, which is sitting at just above 1.1k. And as for horizontal support levels, we do have a lot of support around that $1,000 level as well. And now zooming in even further into the 4-hour Ethereum chart, and we can see something very similar happening here to what we saw roughly around 2 weeks ago when we previously tested this line of resistance, got an initial rejection, and while that was happening, we saw the 4-hour Ethereum RSI get close to overbought territories, but actually back then we didn't quite reach it all the way into overbought territories. But then we started to see a little bit more of a downtrend start forming in the 4-hour Ethereum RSI. Once again, lower highs and lower lows is what I'm looking out for. And also what we saw back then was a decline in the histogram within the MACD indicator, and once we got that 4-hour bearish cross, that provided some more confirmation for a bearish movement in the short term. And right now, if you're looking at these 4-hour Ethereum price oscillators, we're starting to move in a similar direction to what we saw back here a couple weeks ago. But right now, we haven't yet properly confirmed a downtrend in the 4-hour Ethereum RSI, and we haven't yet confirmed that bearish cross in the 4-hour Ethereum MACD, which is another signal that I am looking out for once again. But what is really interesting is if you're taking a look at the Ethereum short positions on the Bitfinex exchange on the weekly time frame, right now they're basically at all-time low levels. And once again, this chart shows the amount of money, or more specifically, the amount of Ethereum sitting in these short positions. So this is the amount of money basically betting on the price of Ethereum going down. And as you can see by this chart, there is pretty much a record low amount of Ethereum betting on the price of Ethereum going further to the downside, which means those big Ethereum whales holding a lot of money in Ethereum short positions back up here are simply no longer in those Ethereum short positions, at least on this exchange. And once again, that time period back there where the Ethereum whales were holding a lot of money in short positions, basically betting a lot of money on the price of Ethereum going down, that was during November, December, January this year. And obviously since then, they have done very well on those short positions. They've simply taken a lot of profits. And right now, there's not many big plays, at least on this exchange, betting on the price of Ethereum going further to the downside. But that chart talked about the amount of money, or the amount of Ethereum in those short positions, Whereas this chart right here shows the amount of people, the amount of accounts shorting Ethereum on the Bybit exchange. And as you can see, the amount of accounts shorting Ethereum on Bybit is pretty much at an all-time high level, which means right now there are a lot of people out there betting on the price of Ethereum going further to the downside. Meanwhile, if you're watching the big money, pretty much all of the big money has left these short positions, at least over on the Bitfinex exchange. And if you want to know how to long or short Ethereum or Bitcoin over on Bybit, check out the video popping up in the top left. Or if you want to know a simple yet profitable strategy to make money in choppy sideways price action, check out the video popping up in the bottom left. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.